Hi, good evening, everyone. Welcome to our webinar, Unlocking the Credit Puzzle. Before we begin, I would like to introduce our host, Crescent Oakley. She's our financial education specialist and has been with the credit union since 1992 and has more than 30 years of experience helping members build confidence with their finances. Today, Crescent will talk about the importance of credit and share ways to keep your credit healthy and tips to protect your credit against fraud and scams. If you have any questions, please type them in the chat and we will read through them at the end. Or you can raise your hand to directly ask your question to Crescent. We also want to let you know that we receive all your questions from our email. So if you think that we've missed any of your question, please share them in the chat and we will go over it as well. So to kick things off, I would like to turn the floor over to Crescent.
Hi, thank you for joining us. This is one of my very favorite topics. I love talking credit with people. So I hope that everybody can take something away from this, whether you've established credit, had hiccups with credit, haven't had any credit, anything like that, or maybe just something that you didn't know. So I hope that you learned something today. Thank you for joining us, and let's go ahead and get started. We're going to unlock that credit puzzle. It does matter at every age. There are steps to, once you have developed it, you want to keep it going. So we're going to review some of those tips. So why is credit important? It used to be you knew that you were going to have your credit pulled if you applied for a mortgage, if you applied for a car loan, if you applied for a credit card. Those were really, when I started establishing credit, those were the things that you knew your credit was going to be pulled for. It's pulled for an awful lot more reasons now. There are employers that will call it, that will pull your credit. Generally, those are going to be a hard pull. They do have to let you know. Anytime anyone is pulling your credit, they do have to let you know and have your permission. But an employer might need to pull your credit to see, you know, how you handle your own credit accounts. These employers are going to possibly be government type of positions in a financial institution, somewhere where the employee is going to have confidential consumer information. We want to make sure that you handle your own in a manner that is correct, so they are comfortable hiring you. Applying for a new bank account. A lot of banks now will pull credit to see that, not really to see your credit history necessarily on those. They pull credit basically for the information. They have to identify you. They have to know your name and social security number match what your application is. They have to see if you have any credit freezes or credit alerts on your credit report. If they don't pull those and you do have one of those and they didn't verify that alert, that bank could be in a lot of trouble. So a lot of people get very frustrated. If you have a lock on your credit, you're going to have to unlock it because the credit union or bank is trying to protect themselves. Applying for rent, a lot of landlords and tenants, property managers, they just want to see how you pay your bills. It's going to be an indication of how you're going to pay your rent. So they're going to pull credit. If you're looking at starting or buying a business, oftentimes your personal credit is what is going to establish that business. So you're going to have to use your personal credit to say, I can support this business. This is how I'd run my credit. And then, like I said, the credit lines, the loans, the mortgages, things like that. Those are the things that credit could be pulled for. Like I did mention, they do have to let you know if they're pulling your credit. So it shouldn't ever be a surprise. Some of the credit pulls are going to be a soft hit, which basically means these are done by probably the bank accounts. Insurance companies, those are another thing that also pulls credit. They do a soft hit, and that basically means an inquiry is not showing up on your credit report. So if you opened an account today and then next week you went and applied for a loan, that account inquiry is not going to show up on that. It's a soft hit. It's just saying this is like a screenshot of their credit. Okay, so we're going to move on to the next page. And we are going to start building your credit profile. When I established my credit many moons ago, I was very lucky to have parents that helped me. They co-signed for me to get just an overdraft loan for my checking account. Small little loan that I had to make the payments on, but it built my credit with their help. I wasn't going to default on that because I knew I would have to answer to my parents and I wasn't going to have that. So they helped me build it. But once I started establishing it, I was able to do the rest on my own. Not everybody is lucky that way and has somebody that can co-sign for them, but there are other ways to start building it. There are secured loans or secured credit cards. There's a difference between these. A secured loan, basically, you put money in a savings account. They loan you, they freeze that money, they give you a loan for that same amount. As you make payments on that, that money loosens up and becomes available to you. There's also a secured credit card. You put in, say, $500 in an account. That $500 is frozen until you apply and qualify to have that credit card become unsecured. So generally here at the credit union, we have a $500 as our minimum limit. And you put $500 in a savings account, you open up a credit card for $500. It's, like I said, it is secured in there while you use the card. Generally, you want to see 6 months to 12 months of payment history on that before you want to apply for something unsecured. A very important thing with building credit is don't rush it. When you rush it, it can mess up your credit more than help it. So it's not an overnight fix. It's not an overnight build, but if you do it right, it's going to be worth it. Okay, so if you don't have the money to secure a loan or a credit card, you could see if you get a cosigner. Could be a friend, it could be a family member. There's no real rules on who it is, as long as it's somebody that has good credit and they're going to go ahead and guarantee the loan. They'll pay it if you don't make the payments. Get added as an authorized signer on credit cards. This is kind of tricky and you really want to do some digging if you're going to do this. When my husband and when our kids started driving, my son turned 16 and we didn't want him to ever run out of gas. So we gave him a Texaco card. I don't even know if there's any Texacos around anymore, but we had a Texaco card. So we got one in his name just so he would have it in case he ran out of gas somewhere. When he turned 18, I wanted to get him a credit card. I went in to co-sign for him, found out he had a credit score. Those 2 years that he was an authorized signer on that Texaco credit card, he never made a payment. He benefited from it though, because he got to start building his credit score. I was happy about that, but it was something I didn't know. Here at the credit union, we allow authorized signers on our credit cards. It does not report on that authorized signer's credit though. So that's where I'm saying everywhere is a little bit different. You want to do a little bit digging for the reason you're wanting to add an authorized signer. If it is really to build their credit, it's probably better just to co-sign for them to have their own line. And then rent and utility bills can report to credit. It's not necessarily going to benefit you if you don't have any credit lines built at all. But if you even have one line and it's just maybe a couple of months old, you can apply through, I know Experian has Credit Boost. that as long as you can show your rent or some of your utilities being paid in a timely manner through your checking account, they will credit that, and it can bump your credit score up by 10 points overnight. 10 to 20 points, just depending on what it is. So there are some ways to improve your credit score once you've started building your credit, okay? All right, I think that's about it on that page. We are going to move over here, and once you've started building your credit, oh, occasionally, yes, Karen is going to go ahead and put some links in the chat section. We will also include them in the notes that we email to you after the webinar. And there's just some helpful links of pages you can go to within our website to help you with more information on these things. All right, so once you've started building your credit, you want to keep it positive. Apply for loans, auto loans, mortgage loans, personal loans. Use your credit responsibly, pay it back on time, and build your credit score. So applying for loans is good. Like I said, it's not an overnight thing, and doing it too quickly can hurt you more than it can help you. So you don't want to overdo it. If you think you're going to need a car in the next year, maybe only apply for one credit card or one personal loan before that year. You want to keep it spread out so that you don't, it doesn't look like you're looking for credit every other month. You don't want unnecessary credit pulls because that can be damaging. So don't apply for too much, and you don't want to take on too much new debt at one time. If you open up 3 credit cards within 6 months, and then 2 months later you need to apply for a car loan, well, the lenders are going to say, you know what, they really haven't had these 3 credit cards for that long. How do we know that they can handle those and a new car payment? I think we need to wait. I think they need to wait a little bit longer and build their credit. Can be a red flag to the lenders. So what I try to do is I try to only keep major credit card lines. Visa, MasterCard, those are the 2 that I have. I don't have Discover or American Express or anything like that. I just have Visas and MasterCards. I have a few of them, and I keep them in rotation. So sometimes there's a department store, especially around the holidays or with back to school coming up, there may be some that offer great perks if you open up that store's credit card or charge card. That's great. If you get a really good benefit from it, go ahead and take advantage of it, but try to be able to pay it off the next month. Otherwise, the benefit that you get, any discounts that you got, could be eaten up big time when the interest hits, because the store cards are generally much higher interest rate than a regular credit card. Now, there's not a lot of stores that offer like the charge cards that you can only use at their stores anymore. Most of them have an agreement with Visa or MasterCard, and it does turn into a major credit card. So those are great if you can get them. Sometimes they're easier than others. If you've been on your job maybe for a long time, might be easier to get it if you don't have a lot of credit. It's just luck of the draw. Sometimes they just want to see a debit card too, and they run something through the debit card, and I don't know exactly what that does, but it might go through like check systems, and it says, you know, if you've had bounce checks or checking accounts closed, that might be another way that some of them are checking for the department stores to give you a card. Just again, remember to pay off that balance. You don't want to save 20% this month and then you had to pay almost 30% in interest over 2 months because you couldn't pay it all off. So try to make sure you have that money to pay it off. Hopefully you had the money to go shopping anyway, and you were going to buy the things with cash, and you can just use that. Understanding how to use it responsibly can help build your score quicker than anything. I have had over the years, been here a long time. Most of my time has been in the branches, and I've helped a lot of members with just budgeting in their accounts or applying for loans, understanding loans, things like that. One tip I can give you is I used to have a lot of members that they knew every year they needed to pay their insurance or something that they knew came up every year or every 6 months. And they would come in regularly and apply for a personal loan. Okay, they're approved. They have credit. It's great. We're going to give you this, pay it back, come back in 6 to 12 months and do the whole thing again. What they didn't realize until I would sit and talk with them is they're actually damaging their credit more doing it that way. If they would apply for a credit card with a little bit more of a limit than what they actually needed, then we don't have to pull that hard credit pull every single application every 6 to 12 months. They have that credit line. They can pay it off as they would have made payments on their personal loan. And then they have access to draw again against it without having a credit pull. So that can be very helpful. Personal loans can be great, but if you're using them kind of like a credit card, probably better just to apply for a credit card. Okay. You want to try to keep what you owe on the credit card at least 30% of what the balance is or what the limit is. So if you have, we're just going to take easy numbers. If you have $1,000 limit, you don't want to have more than $300 on that card. That's going to help your credit build the quickest. And then paying back on time, big. That's huge. That is the biggest impact to your credit score and is the payment history. So once you have started building credit and you have that history you're making, make sure even if something comes up and you can't pay it off every month or you can't do whatever, you can't make big chunks. You only can make the minimum. Make sure you make that minimum payment before the due date. It's really funny. I have had people come to me and say, well, I watched something and it said, if I'm going to make a big payment, just make it like right before the due date, right before the payment is due. And with Create Credit Union, at least, we charge you interest based on the average monthly balance. So if you have a big chunk that you're going to be able to pay it as early in the month as you can, because that way your balance is coming down. We're charging you less interest on a lower balance for the remaining part of that month. Okay. I hope that made sense. We're going to go ahead and move on to the next page because this is a lot about the credit. We're going to talk about maintaining the positive credit file once you've got it built. The 5 C's of credit. Maybe some of you have heard of this, maybe some of you haven't. Basically what a credit report is it is your resume. It is your credit resume. Lenders don't know you. So all they can do is look at your resume, often like an employer can look at your resume to see if they even want to set up an interview. A lender can look at your credit report and make some sort of decision on whether they want to lend to you or not. So the 5 C's of credit are character, your payment history. Like I said on the previous page, your payment history is 35% of your total score. So that is huge. That is a big amount that if you have one late payment can be a detriment for up to 7 years. It can stay on your credit for up to 7 years. So it's really important to keep, at least like I said, the minimum payments made by the due dates. Okay. So all of these 5 C's of credit don't necessarily mean you're going to be approved or denied or given a counteroffer for a loan, but all of these are going to go into the decision. With the character, what it's going to have an impact on is terms of the loan that you do get offered if you're approved for one, the rate that you're offered, how long they want to let you take out the loan for. Maybe they want it to be a shorter term because they want to make sure that it gets paid off a little bit quicker and it holds its value a little bit longer. So the terms of your loan are going to be based a lot on your payment history. So very important to keep that up, okay? Also the recent credit inquiries, the hard inquiries that do show up on your credit report, those are going to have a little bit of an impact on your character. Again, like I had mentioned earlier, if you're out there looking and having hard credits pulled every couple months, it might look as if you're desperate for somebody to give you a loan, or you just really don't know what way to go, what road to go down. So just try to plan out when you need to have your credit pulled. Capacity. So a lot of people think that capacity is based on, like I was saying, the limit on your credit card versus what you owe on it. That is a form of capacity, but in this instance also capacity it's 30%. So these two C's are 65% of your total credit score. But there's a few different things tied to capacity. Basically, it's what is your income and what is your job and how long have you been at your job and what is your debt ratio compared to your income that comes in. Comparing your monthly debt to income is DTI. You may have heard that. I don't know. They want to compare that. They want to keep that definitely under 50% with the new loan that they're looking at giving you, but the lower you can have it, the better. The consistency and sufficiency of your income. Are you relying heavily on tips? Which is generally fine because those are reported and showing on your check stub, but are you seasonal? Are you a lifeguard? Are you a ski slope worker during the winter? What is the likelihood that you're going to keep that job year round? Those are a few things of the capacity that goes into, can you handle this loan? Then we have capital, amount the borrower is contributing. Very important, if at all, if you can, have money to put down on a car loan. If you're buying a car, on a home, you have to. On a car loan, you don't always have to, but it really does show the lender that you are willing to put your own skin in the game, as we call it. You are willing, if you're willing to come forth with $1,000, $2,000, $5,000 of your own cash to put down towards a payment on this vehicle, that shows the lenders that, you know what, you're serious and you don't want to lose out on that cash. So you're going to probably make sure that you make these payments on time. So how much are you willing to contribute to the loan? Helps them decipher. Now, there are sometimes there's first-time buyer programs that require a specific amount of cash to be put down or a percentage of the loan to be put down. But once you've built your credit, you might not be required to put any down. I do encourage you to put some down if you can. We do have, on our website, there are a lot of calculators that can help you, and there's one that's really cool, and I'll make sure that it gets included in the notes after this, but it just kind of shows you if you're going to borrow $30,000 for a loan for a car, and this is your your percentage that you're going to be charged. If you put $1,000 down, what does that do to your payment for the term that you're looking for? If you put $2,000, it's a really cool calculator that kind of can help you know how to budget for the car purchase. So then getting into the collateral and the car purchase. Collateral isn't necessarily a car. It could be a home. If you're doing a mortgage or if you're doing a home equity loan, what is securing this loan that we're giving you? If it's a personal loan, you're still securing it with your signature. But because your signature is securing it and we don't have a title to a car or a deed to a home, it's a little bit riskier. That personal loan is going to be a higher interest rate. Just know that personal loans are going to be higher interest rate than collateralized loans. So always great if you have collateral, you can secure it with that. This is something that often people get into trouble and they get into too much debt and they can't really figure out ways to get out of debt. But sometimes if they don't give the loan officer the whole picture of what they have out there, it's harder to help them. So if you are struggling with anything, but maybe you have a car title, it might be older, it might be an older vehicle, but still make sure that you let them know everything that you have access to. Sometimes when you have a lot of debt with credit cards, a personal loan might be the way to go to consolidate those into one. It's not going to be a lower interest rate necessarily, but you're going to get all of those little payments that you're sending out every month combined into one, and hopefully you could get a lower payment, at least maybe not lower interest rate. That is something to think about. And then the conditions, the loan terms. Why do you need the funds also? Is it a new purchase? Is it a refinance? If it's a refinance, do the new terms benefit you? Do they benefit the collateral? If it's a refinance and you're very upside down, meaning say the vehicle is worth 20,000, but you owe 28,000, that might be a hard refinance to do. Those conditions are tough. You might have to come in with some skin in the game to counteract that negative. What are the industry trends doing? Are values on homes back in 2008 when we had the housing boom and bubble and bust and all of that good stuff? There were, lenders were backpedaling on what they were approving for things because the market was going down. So there's a lot of things that come into play when what goes into your loan when you're applying for it. But I can't express enough to make sure that the payments are paid on time. That is the number one thing I hope you take away from today, because that is very, very, very important. All right, we're going to move on. And so you've built your credit. Oh, thank you, Karen. She just sent all the calculators that we have on our website. Well, probably not all of them. It's a link to the calculators. So many cool calculators out there. So now say you've built your credit, everything's going along, and you know what? There's a rock in the road and you hit that bump and it sets you back. You're going to notice that really rebuilding your credit is very, very similar to building your credit. It's going to be a lot of the same things. It might not be as easy to find a co-signer, because generally, if you're at this point, you might be a little bit older. It just might be tough to find a co-signer. But if you have one, that's awesome. Or if you can even get $500 together, start back on that secured credit card, secured line, secured loan, and go ahead and, start it that way. It actually takes a little bit longer to rebuild, unfortunately, because you do have the history of negative credit to overcome. So although you might have some positive on your credit history also, the negative, unfortunately, is going to outweigh that positive, and it can be a little bit longer of a process. But it's definitely not impossible. Please don't ever think that it's impossible. A lot of the times negative credit is no fault of your own even. I mean, life happens, medical things come up, you know, accidents happen. You lose your job. There's so many things that can come up that can affect your credit in a negative way. I don't want anybody to feel that that paints their life picture or anything. It is something to overcome. We can get past it. We can help you review your credit report. That is probably one of the first things you want to do is pull your credit report and review it. You want to make sure that the information that's on there is accurate. Is something reporting negatively that shouldn't be? There's ways for you to dispute that. There are at the end of the slide, we will have all of the credit bureau information on there. If you have anything to dispute, if there's a name spelling wrong or your address is wrong, there's ways to correct it. Generally, it's easiest if you do them online through the credit report, credit bureaus. But there are also phone numbers that you can call or you can handwrite and snail mail to. Once you've started building your credit again, or attempting to build your credit again, if you're trying to prove, make sure you set up your bills on like a recurring debit or something so that your utilities at least are being paid on time, because then if you've got those being paid on time, again, you can do that credit boost to try to start boosting your score up. And also ask your financial institution if they have credit counseling. I am a certified credit counselor. I am happy to meet with anybody at any time for any individual sessions that they might want. You're going to have all my information at the end of this webinar. Please reach out if you have questions. If you filed BK and that's what your bump in the road is, BK7, as soon as it gets discharged, you are eligible to start reapplying for debt or for credit. So basically, it discharges today. Tomorrow, you can do a secured credit card or a secured loan. Either way, you can do anything once that BK7 has discharged through the courts. The BK13 is a little bit different. It basically, the trustee sets a payment plan. You have to pay off this payment plan before you can establish any new credit. So that one takes a little bit longer. There's reasons for each of them. Not going to get into those. But I just want you to know, if you do run into some trouble with credit, easy. We can help you fix it. Don't get frustrated, okay? It is fixable, just have to be patient. Okay. Wait a minute, I want to go back here because the credit report disputing any inaccuracies. You want to make sure, it's very important to make sure that the address and your employer, those identifying informations are accurate. If they're not accurate, maybe they're just not updated. That could be. But if they're completely different, that could be a whole nother sign. That could be a sign of some fraud possibly happening. Okay, so we want to be careful with that. So you've earned your credit score now. We want to protect it. If you see any inaccuracies like that, what a bad address on your credit report can indicate is possibly somebody's applying for jobs or accounts, maybe bank accounts in your name, and they're using a different address. That could be a good indicator that you're in the process of having your identity stolen. So just things that people don't think are important to look at, very important to look at. Once you have established your credit score, you want to protect it. There are many ways to protect it. All three credit bureaus give you the options of freezing it. You can put a credit a consumer alert on it to where they have to call you in order for them to move forward with any new loan applications or even account applications. So a freeze and an alert are similar but different. So a freeze, you, the consumer, have to let the credit bureau know, I am going to apply for this. I need my credit unfrozen. They will go ahead and unfreeze it, and for a short amount of time or however long you need, then they'll lock it back up. Okay. It's a very good way to keep those identity thieves out of stealing your very good credit that you have established. You do want to monitor your credit, obviously. Everybody is entitled to one free credit report a year at freecreditreport.com. It won't give you your credit score, but it will give you all of your lines, all of your payment history, your identifying information, name, address, things like that. And just kind of check it for unusual activity. Now, all of the credit bureaus offer to where you can have an account with them, and they have free accounts, or they have accounts that you can pay a certain amount for. And I don't really know the amounts of those payments because I don't pay for those. I only do the free ones, but I get emails. I get a notification at least monthly that my credit score has changed. I get indications that I could be pre-approved for different credit cards out there. I just want to know that if something comes up that is not normal, I'm going to know about it. You want to fix your mistakes, correct any errors that could lower your score. So make sure if you had a late payment with a creditor, but maybe you had an agreement with that creditor and it didn't get updated and the late payment is showing as an actual late payment instead of the agreement, get something in writing from the creditor, submit it with your writing to the credit bureaus, and they can update those errors. Okay. And they do update and they do correct inaccuracies. They want accurate information out there too, because if they don't have accurate information, the government's going to come down on them. So that is some ways to protect your credit score. I believe if you have some of these paid accounts with the credit bureaus, you can look at your full credit report with the score, I think like weekly, maybe even daily. I don't really know. Create Credit Union has 2 different checking accounts. Our bonus checking comes with identity theft protection and credit report monitoring included in the monthly fees. So $5.95 or $6.95 a month, and you get both of those features plus other things in it. Just want to let you know that you don't have to go to the credit reports. You can get it through our checking account also. All righty. So we work hard our whole life to build our credit. And we want to help our elderly family members too. Our elderly family members often are at risk of identity theft even more so than us because they maybe get confused. They maybe give more information on a phone call than they should, aren't sure if an email is right and they open the wrong thing. I highly encourage you to sit down with your elderly family and kind of go through and, do some regular monitoring with them. Maybe not their credit report, but their bank account, maybe make sure that they understand all of the debits that came out of their account. Make sure that ATM withdrawals, things like that are actually theirs. Educate them on scams that are out there. Right now, the AI scams are crazy. It's so scary that, there are people that are getting voices from social media or whatever, and they are making phone calls to these elderly people and scamming them out of money because they're saying that they're their grandchild or their friend or whatever, and they need help and they need them to send money. So there's a lot of things out there happening that the elderly just might not be as informed about. So help protect them. Sign them up for the credit reports, the freecreditreports.com. They can get those. I think they can get them automatically. If not, just make sure that you make it an annual occurrence that you're going to help them with that. And just do the regular account reviews with all of their information. If they have multiple credit cards, look at those, make sure the charges are really theirs. And then block scammers and opt them out of mailing lists for your parents. I don't know how well the blocked scammers actually on our phones really works. Like, you know, you get a phone or you get a text and you delete it and it asks report to scam, or I don't know that those really work. I mean, it's a good feeling that it does, but there is an 800 number that'll also be with information in here that you can call and set their phone numbers up on that. Okay. These are what I was telling you, some of the important information. The 3 different credit bureaus right here. It's got their websites and then their phone numbers to order your credit report, and then if you have to report fraud. That is another thing that you, like I said, you're not only looking for accurate identifying information, you want to make sure that the information that's on there is true. If you see a credit card that opened 4 months ago and you haven't opened a credit card in a year, that could be fraud. So you want to go ahead and make sure that you're reporting that. You want to report it to the lender, but you also want to report it to the credit bureau. Now, generally, when you report those types of things, they share that information. The information that the credit bureaus don't share, though, is if you put a consumer alert or if you do a credit freeze, you do have to do that on each individual credit report or credit bureau. Okay. The Federal Trade Commission, if you have identity theft, that's the website and the phone number. And then this is the number I was saying, I don't know, opt out of pre-approved credit offers. This should work, but you also usually can just like unsubscribe from those sites when you get emails or whatever from them. The do not call registry, www.donotcall.gov. Government puts your number on. I think it's for a year. It's not indefinitely. You want to update that every once in a while and make sure that you are protected. That is about all of the information I have at this time. I kind of went through that fast. I was talking a little fast. If any of you had questions that you asked in your RSVPs, I hope they were answered. If they weren't, please let us know. Karen can go ahead and let us know. Ask any questions that you have. Does anybody have any questions?
We don't have any questions in the chat at the moment, but I think we can start going over the questions that we got from our RSVP.
Okay.
So the first question that we have is, how do I get out of major credit card debt that I have right now?
This is a fun, interesting discussion. And building credit, applying for loans, budgeting, all of that is, there's no one right way for everybody. So you really have to figure out what works for you. When my husband and I were first married, we each had credit card debt. We each came into the marriage with a little bit of credit card debt. Well, probably more than a little, but we wanted to buy a house. So we took on the method, which is considered the snowball method. And what we did is we took every month when we got our credit card bills in, we put them on the refrigerator, and we took the lowest balance and focused on paying that off. All the other cards, we just made the minimum payments by the due date. Once that lowest balance was paid off, we took everything we were paying towards that, which was extra because that's what we were focusing on. So we took all of that extra and we went to the next lowest balance and we just focused everything on that. And I think it took us about 9 months to get out of that credit card debt. But that was the way that worked for us. You're going to find people that say, no, don't go to the lowest balance, go to the highest interest rate. Well, the problem with that, in my opinion, and for me, is if I go to the highest interest rate and I'm not seeing a big difference every month when I'm getting my bills because the interest rate is so high and it's really not going down, even though I'm paying extra on it, that's going to frustrate me. And I might lose interest in the consolidation at all. So I personally like the snowball method rather than the avalanche. That's considered the avalanche method when you go to the highest rate. There's also, like I had mentioned, if you have titles to vehicles, if you're owning your home, paying on a mortgage, but maybe there's some equity in it, there's a home equity loan that could happen. There are ways out there, maybe just doing a personal loan. You have maybe $10,000 in credit card debt, but you just can't make a dent in it. Well, apply for a personal loan and get that 10,000 into one payment instead of maybe 5 different credit cards, and just focus on that payment. You're going to hopefully have maybe not a big time lower payment than you've been making on all of the credit cards before, but your interest rate should be a bit lower, and the term, you're going to just see it pay off and then know that you're done in 3 or 4 years, whatever the term is. So those are some ways to help get out of debt. There is also, if you do have a 401k or something like that at work, you know, I know a lot of people say don't do it, but sometimes just doing a loan, I don't suggest that you do a withdrawal, but if you do a loan against it, you know, it is a way you're paying yourself back at least. So it is an option. Okay.
Okay, for the next question, how do I get back on track after credit score declines?
Again, it's patience. Why is it declining? Are you not making your payments on time? Are you keeping your balance too close to the limit? You know, it kind of depends on why it's declining, because there's generally a reason, but those are probably 2 of the most common reasons. Is either you're not making the payment on time, which, okay, this stat is mind-blowing to me. If you are more than 30 days late on a payment, more than 30 days, so not just, oh, you missed the due date this month, but you missed this month and you've missed next month, so it's, you know, 30 to 60 days late, that takes 2 years to catch back up on to get your credit score back to where it was before that first late payment. So at least minimum payments. And even if it's a car loan and there's not a minimum payment, just make sure that you're talking with the collection department. Make sure that you're talking with people that can help you. I guarantee you, if you're having trouble with a payment on your car loan, that collection department does not want to repo that car. That is the last thing they want to do. They want to help you. They want to help you stay on track or get you back on track, and they do not want to take back that car. That is the last thing they want to do. So don't hide from them. They are there to help you.
The next question, how often should you be checking your credit score?
Well, like I had said, you know, you get at least the annual. credit report. That's not your credit score. I go in on our website to my checking account and I can look at my credit report. I can look at the credit report every day. It's not always new information. They update the credit score every 6 months, but they update the information for payments and everything monthly. So I do highly encourage you to look at some form of report at least once a month, just to know that the information is accurate. If you can't do it, if you don't have access to do it that often, at least do the annualcreditreport.com, because you need to know what's out there. I mean, like I said, that's your resume, and you don't want somebody trash talking you that you didn't know was happening.
Okay, for the next one, how do you fix errors on identifying information on credit reports quickly?
The quickest way, like I had said, is the online. On the all of the websites here, if you go online, you can complete and submit something right then and there. I mean, I don't know that it's going to like fix overnight, but that is the quickest and easiest way to update and correct anything. They're probably going to, if it's a name misspelling or an address, they're probably going to need you to, you know, upload maybe a driver's license or something like that to make sure that it's correct. But that is the easiest and quickest way to do it. And then if, you know, you can always just call them and ask them how long it takes, what are the best steps to do it. But I would just, most everything you can do online.
Okay, and then someone asked, why is my credit score wobbling?
Why is it what?
Wobbling. I guess it's fluctuating, I think.
Oh,
yeah.
Well, that's kind of back to, you know, why the question before the last one. A lot of the times it's because of the amount owed on a credit card versus what the limit is. People don't understand how much that does impact their credit and the importance of keeping that balance under 30% of the limit. When I used to give first time, borrowers, they were applying for their first credit card or whatever, I would just tell them, I said, don't use this as if it's cash, you know. I mean, use it, buy a tank of gas, buy something that you know you can pay off every month. When I established my credit way back in the day, we were told to keep a balance on your credit cards, that's how you establish credit and build your credit report and your credit score. That is not a true statement at all anymore. And you don't have to pay your credit card companies any finance charges ever, and you can build a credit score. What they're looking at is that payment history. And if you're paying it off the next month, paying it off, you're showing that payment history. You're keeping that active. One thing I do, I think I have about 4 major credit cards. I don't use them all. I pretty much use my credit union one or sometimes my Costco one. I'll go back and forth between those. But the other 2, I will throw them in the rotation at least once every 6 months because I don't want them to close. That could be another thing that is impacting your credit score. When I just want to have the limit available and show that I've got this long time history with these companies, but I don't owe them anything. But if you don't pay a credit card, if you don't use it within, I don't know if there's a set amount of time. I know here we used to say if you didn't use it within 3 years, I think we assumed that you didn't want it. I'm not positive if they still close now anymore, but I just don't want that happening. It looks better because it comes back to that capacity and the amount that you have available to use and the amount that you are using. Even if it's only, you're only using a balance on one card, but you have these other 4 cards that have limits that have nothing on them, that all counters into that credit card capacity. So overall, you've got a lot of room to use. I hope that made sense.
And then the last question from our RSVP is, what is the best way to establish credit?
Well, I think that's going to be either the cosigner, and it's establish or reestablish. Honestly, it's the best ways are if you have a cosigner. A lot of people don't want to ask anybody though, and I get that. Then the secured route is the way to go. Secured credit card, secured loan. One thing I did want to mention is sometimes when you apply for a credit card and you're securing it out there with some places, it shows up on your credit as a secured credit card. Ours does not. If you do a share secured credit card with us, we report it as a regular credit card. I don't think that it doesn't have any effect on your credit score, but another lender, if you're applying for something down the road and they see that there's a secured card, I do think that they're going to look at the approval and the terms maybe a little bit differently. So it doesn't negatively impact your score, but it does show on the resume that it's a secured card. But like I said, ours don't show that way. Ours show as just a regular credit card. I saw somebody.
Yeah, we have one comment from Rosalind, and she said, my experience has been if I have not used a card for at least 18 months, the card issuer, the bank, or the store is more likely to close the account.
Yeah. And a lot of people don't realize that can be detrimental to your credit. You know, that can have an impact. I'm probably at risk of losing my Kohl's Capital One account here soon because I can't remember the last time I've been to Kohl's. But now that I go to Home Goods and TJ Maxx all the time and I've gotten their card, that one's probably going to be closed down on me. But that one, it is a store card. It's not going to affect me as much if it does close. But yeah, there are, and every card is different. Every lender is different with the time that they will close out the card. But really, they're doing it to save you, the borrower, and them, the lender. They're not doing it to be mean. They are doing it because they want to protect all parties. They don't want a card out there that is not being used and maybe it's lost and you forgot that it was lost and somebody finds it and starts using it. And they don't want you to have something that you're not interested in using anymore. They don't want to continue, having that possibility out there for you. So there are different times, but yeah, 18 months, that seems a little early, but I could see it on some of them, probably more of the store cards, I would imagine, but yeah.
Okay, while we're talking about close accounts, somebody asked, does it hurt credit to close accounts, or is it like a significant drop once the credit card closes?
The tricky part is the credit bureaus, everybody knows that, okay, you can bump your credit score by 10 to 20 points if you use the credit boost. You can, one late payment can lower your score by 70. They say certain things, but they don't give you the formula. So nobody knows exactly the formula of what hurts the most like that, or how much a closed account is going to affect your score. But it is going to affect your score, especially, okay, I've worked here at the credit union for 34 years. Karen had mentioned that in the beginning. I've had my credit for a very long time. If a couple of my cards close on me, it's probably not going to be as detrimental to me as somebody that maybe has only been establishing credit for 5 to 10 years or so. If you have a couple of cards that close out on you because you're not using them, that could have more of an impact, because it's that capacity of what you can charge versus what you have balance. And if they're closing, that's taking away some of that capacity.
That is it for the questions that we've got. If anybody here has more questions about credit, please put them in the chat, or you can actually raise your hand and then we can unmute your mic so that you can directly ask it to Crescent. I think that's the easiest rather than typing.
Or if you don't want to ask it here too, take down my information and email me, call me. The calling is kind of tricky because we don't have real phones anymore. It's a program on our computers, and I don't always remember to log into it, but I always am on my email. Even if you email me and say I would like to call you.
Maybe we'll wait maybe like 30 seconds.
Yeah. I appreciate that you guys have taken the time. I'm sorry that I'm done earlier than I expected.
Yeah,
I hope I didn't talk too fast over things.
I guess the thing is, like, do you have any more last few words, like reminders or tips to our attendees tonight?
I bet they're going to know what I'm going to say. Pay your bills on time. When possible, set it up on an automatic debit. You have control. When you set it up through your online banking, you have control of that payment going out. If you call, just say Citibank, and you say, okay, take my payment every month, and you give them your account number, you know what? You've given them access. If you want to make a change to that payment, you have to give them at least 5 days notice, because it's an ACH item and it's really technical, and they're in all charge of it. So I prefer to put automatic payments on our side, go through your online account and set them up that way. But those often will help you also save from those late payments. Everybody gets busy. Everybody, has things, and oh my gosh, that payment is due tomorrow. Let me see if I can call and make a payment or whatever. Sometimes that happens. It's not the end of the world. There are grace periods generally on loans, but you don't want to rely on those, because that can draw out and cause more problems. So make your payments on time. Just make your payments on time.
Yeah, I think that is it for tonight. I know we still have like 30 minutes. If you're good to close the webinar, I'm good with that.
If you guys don't have any more questions or anything.
Yeah, I guess we can hang out for a bit.
I appreciate you guys taking the time and spending it here with us tonight.
Yes, and be sure to check your emails tomorrow. We will send an email with this recording. If you want to, look through what Kristen has talked about, we will have that tomorrow, along with the takeaway notes, and the links that we shared in the chat will all be there. And I see.
Oh, there we go.
Yeah. Oh, yeah. Okay.
Thank
Rosalind.
you.
Oh yeah, thanks, Rosalind.
It's one of my very favorite topics. I really do. I've loved helping people establish and then rebuild, and I love it.
Yeah, I guess that's it for tonight. Thanks again, Kristen, for that very informative session. I hope that everybody here has learned new things about credit, and that they'll be able to share it with their friends and loved ones. Yeah, so good night, everyone. Thank you. Bye.
See you. Bye-bye.